This is Meet Sean, where we break down real life topics insurance, annuities, real estate, travel planning, and home ownership so you can make smarter moves. Subscribe so you don't miss the next episode.
Every single month, thousands of veterans and service members end up paying what basically amounts to a civilian tax on their mortgages.
Oh, absolutely. It's a massive drain.
Right. We are talking about hundreds of dollars just evaporating into thin air every 30 days. And it's simply because they either, didn't fully understand one specific piece of digital paperwork, or they just got totally intimidated by the process.
Yeah, and they just default to a traditional bank, which is really unfortunate.
Exactly. So, welcome to the Deep Dive. Today's mission is entirely focused on you. Whether you are an active duty service member prepping to buy your very first place, or you're simply a curious learner trying to understand how real estate wealth actually functions under the hood.
We are getting right into the mechanics of it today.
Yes, we are. We are unpacking the incredibly powerful, often hidden financial mechanisms of VA home loans. Because it turns out this program isn't just a different flavor of a mortgage.
No, not at all. It is an asymmetrical financial advantage, like a literal shortcut to long-term wealth that a staggering number of veterans accidentally they leave it on the table.
To help us map out how to actually claim that advantage, our source stack today comes from Sean Carter.
Right, the real estate advocate.
Yep. He's a veteran-focused real estate advocate and expert based out of Tampa, Florida. And he has this really deep cross-functional background spanning, real estate, insurance, construction, banking.
He really sees the whole board.
Exactly. His entire operational mission is taking this incredibly complex, sometimes intimidating government machinery and turning it into a streamlined, highly effective wealth-building tool specifically for veterans.
And that requires a fundamental perspective shift to truly grasp, what is happening here. If you looked at VA loans through the lens of just some generic government benefit, you completely miss the magnitude of the opportunity.
So how should we be looking at it?
This is an earned advantage. A literal, tangible financial acknowledgement from the nation for your service. This specialized program provides a level of leverage and liquidity that is, frankly, vastly superior to almost anything available in the traditional civilian market.
Wow. Superior to anything at the civilian market.
Yeah, and having that advantage just sitting there unused is a massive missed opportunity for wealth creation, because translating the raw bureaucratic policy into a functional applied strategy, that's the entire game.
Right, because a benefit that only exists on paper doesn't actually give you any equity.
Exactly. If the process of claiming the benefit is so convoluted or just poorly explained that qualified buyers give up and go get a conventional loan, well, the benefit essentially doesn't exist for them.
Okay, let's unpack this. We need to start with the foundational step, right? The mechanism that actually unlocks the door.
Yeah.
The sources call it the Certificate of Eligibility, or the COE.
The COE.
Now, I usually hear things like this described as a VIP pass or like a golden ticket, but that doesn't really explain what it actually does. What is the actual financial mechanism of this certificate?
Well, think of the COE less like a ticket to get into a club and more like securing the ultimate billionaire cosigner for your loan.
Oh, I like that analogy.
Right. When you obtain that certificate of eligibility, you are proving to a private lender that the Department of Veterans Affairs will guarantee a significant portion of your mortgage if you happen to default.
So you aren't actually borrowing money from the government itself?
No, you are borrowing from a private bank.
No.
But the government is standing right behind you saying, hey, we vouch for them.
That is huge. You're instantly transferring the immense creditworthiness and risk absorption power of the United States government onto your own personal financial profile.
Precisely. But to get that backing, the math is very rigid.
Right, the service requirements. You need to have served 90 consecutive days of active duty during wartime, or 181 days during peacetime.
Exactly. And for those in the National Guard or Selected Reserve, it requires more than 6 years of service.
And crucially, all of those respective paths have to culminate in an honorable discharge, right?
They do. Which, this raises an important question. Knowing that the government demands very strict proof of those service criteria, how do you actually verify it without getting buried in the stereotypical soul-crushing red tape?
Yeah, because the fear of spending hours on hold with some federal agency is honestly enough to make some people just walk away entirely.
Oh, for sure.
I think anyone who has ever tried to, fix an error on their taxes or renew a passport can deeply relate to that dread. The assumption is just that it'll be a bureaucratic nightmare.
And overcoming that dread comes down to proactive, digitized preparation. The strategy is not to wait until you find the perfect house in a super competitive market to start hunting for your discharge papers.
That sounds like a recipe for disaster.
It is. Successful buyers approach this by building a comprehensive digital folder months before they even browse a real estate app. They digitize their pay stubs, W-2 forms, tax returns, bank statements.
Just get everything scanned and ready.
Right, and crucial military documents like the DD-214 or a statement of service.
It's treating the preparation like a deployment workup. You get your gear organized before you are on the flight line.
That's a great way to put it. And once you have that digital folder and you've secured that COE, the immediate next move is getting pre-approved by a veteran-focused loan expert.
Okay, but I want to dig into the why here. In a tight housing market, why is a specialized pre-approval letter carrying so much weight?
Because it transforms hypothetical eligibility into concrete, actionable buying power.
Yeah.
On the buyer side, it provides absolute mathematical clarity regarding your budget.
Which insulates you from the emotional trap of, falling in love with a property that is way out of reach.
Exactly. And on the seller side, it functions as a profound signal of strength. When a seller sees a pre-approval from a dedicated VA loan expert, they know they are looking at a fully vetted competitor.
Because their financing is backed by the federal government.
Right. It completely removes the uncertainty from the transaction.
Okay, so we have the COE, we have the pre-approval dictating our budget, we are actively in the market. Now we need to look at how this program structurally changes the financial reality of buying a house.
This is the best part.
I do have to push back a bit on one of the most touted benefits in the sources, though. The zero down option.
Okay, let's hear it.
Wait a second. In the civilian world, if I walk into a bank and say, hey, I want to put $0 down on a massive asset like a home, the bank either laughs me out of the room or they bury me in astronomical interest rates because I have zero skin in the game.
That is exactly what would happen.
Right. So you're saying the VA essentially acts as my skin in the game? How does this not financially cripple the veteran with massive monthly payments?
See, you are applying the logic of conventional civilian lending to a completely different ecosystem.
Oh, okay. How so?
In a traditional market, lack of a down payment means massive risk for the lender, which they obviously penalize heavily. But under the VA program, the government's guarantee mitigates that risk entirely.
Because the VA is acting as the buffer.
Right. Because the lender's exposure is drastically reduced, they offer VA loans at highly competitive, typically lower interest rates than conventional mortgages.
Wait, really? Lower rates even with zero down?
Yes. So the veteran is actually getting a lower baseline cost of borrowing right out of the gate.
That is wild. But the interest rate is only one piece of it. The other side of that equation is the private mortgage insurance, the PMI.
Yes, the elimination of PMI is the true structural advantage here. Let's look at the mechanics of PMI in the civilian sector. If a traditional buyer cannot put down 20% of the home's purchase price, the bank forces them to purchase a monthly insurance policy.
And that policy protects the bank,
Right.
right? Not the buyer.
Exactly. It protects the bank in the event of a default. The buyer pays hundreds of dollars a month for a product that yields them absolutely zero equity, zero value, and zero protection. It is purely a risk tax.
That is the civilian tax we were talking about earlier. If I am paying like $300 a month in PMI on a conventional loan over a 30-year mortgage, that is over $100,000 just vaporized.
Oof, gone.
Doesn't pay down a house. It doesn't go into my savings. Just gone.
And with a VA loan, that requirement is completely waived by law.
Wow, by law.
Yep. By removing that manufactured risk tax, the veteran immediately reclaims hundreds of dollars a month in cash flow compared to a civilian counterpart with a similar loan profile.
That is a massive advantage.
It is. Furthermore, the VA actively caps the closing costs that lenders are legally permitted to charge veterans, which prevents predatory upfront fee stacking at the closing table.
Here's where it gets really interesting. Because of the zero down capability, the absolute elimination of PMI and those legally capped closing costs, we are talking about a totally different wealth building strategy.
A vastly superior one.
Right, because the service member isn't forced to liquidate their entire life savings or, empty their investment accounts just to cover the cost of admission. They keep their capital liquid.
And retaining liquidity while acquiring a highly leveraged appreciating asset, That is the cornerstone of advanced financial planning.
Let's break that down for the listener, because the opportunity cost here is massive. If a veteran keeps, say, $60,000 liquid instead of sinking it into a traditional 20% down payment.
They can deploy that capital elsewhere.
Exactly. They can put it into an index fund, use it as a robust emergency safety net, or invest in immediate value-adding home improvements.
Right. So they are acquiring the house, capturing all the appreciation of that asset over time, while their $60,000 is out in the market working for them simultaneously.
It creates a dual engine of wealth creation.
Perfectly said. You have your liquid capital growing independently, and you have the property itself functioning as an automatic wealth generator. When you own the home, the principal portion of your monthly payment actively increases your ownership stake.
It's basically forced savings.
Exactly. Combine that debt paydown with the historical upward trend of real estate values, and you are rapidly expanding your net worth.
And then that accumulated equity becomes tangible leverage for later.
Right. It translates into borrowing power for future investments, funding for education, or the foundation of a secure retirement.
It reframes the entire concept of the mortgage. It stops being this daunting monthly penalty and becomes a structured, highly leveraged investment vehicle.
It really does. But, theory is one thing. Execution is where things usually fall apart.
Yeah, that's true. When you combine the phrases government program, mortgage underwriting, and military timeline, most people immediately envision an administrative disaster.
And if we connect this to the bigger picture, executing the strategy successfully requires recognizing that the military lifestyle is fundamentally incompatible with standard big box bank underwriting algorithms.
Yeah, they just don't mix.
You really need a partner who understands the distinct human reality and the volatile timelines of service.
A civilian underwriter looks at a leave and earnings statement, an LES, and it might as well be written in ancient Greek.
Oh, completely.
They see hazard pay, housing allowances, and these unpredictable deployment schedules, and they view it as income instability. They just see risk.
A veteran-focused advocate, however, recognizes those exact same documents as highly reliable, government-backed income streams. They understand how to correctly calculate allowances for housing and subsistence to maximize the veteran's purchasing power.
They aren't confused by the paperwork. They actually know how to leverage it.
Exactly.
Let's address the friction points directly, because the sources highlight several pervasive myths that actively deter service members from utilizing these benefits.
There are quite a few.
Let's look at the lifestyle aspect first. Say I am stationed in San Diego, right? I use my VA loan to buy a house, but 3 years later I get a permanent change of station, a PCS order, moving me to Virginia. A lot of people believe the VA loan is a one-and-done deal. Did I just burn my one ticket to home ownership?
That is one of the most damaging misconceptions out there. The VA entitlement is entirely reusable.
Wait, entirely?
Yes. If you receive PCS orders and need to move, you can sell the San Diego home, pay off the VA loan, and your full entitlement is restored to buy a new home in Virginia.
Oh, wow. I think a lot of people don't know that.
And it gets better. In certain scenarios, depending on how much entitlement you have tied up and the loan limits in your specific county, you can even have multiple VA loans active simultaneously.
That is incredible. So the program is specifically designed to accommodate the transient reality of a military career.
It is built for it.
That drastically changes the long-term planning perspective. But what about the speed of the transaction? Because a common fear is that since the government is guaranteeing the loan, the appraisal and approval process will move at a glacial pace.
The slow government myth.
Right. If I am competing against a conventional buyer, the seller is going to assume my VA loan will take like 60 days to close, and they'll just pass over my offer. How does a specialized advocate actually fix that?
They fix it by fundamentally re-engineering the workflow. Traditional banks often treat VA loans as anomalies, processing them manually.
Which takes forever.
Exactly. But dedicated VA advocates utilize automated direct-to-VA digital systems. They run the verified documents through the automated underwriting system before the buyer even makes an offer on a house.
So they do the heavy lifting up front.
Right. By front-loading that administrative lifting and utilizing established networks of VA-certified appraisers, they strip the delays out of the system. A meticulously prepared VA loan package managed by an expert team can frequently close just as fast, if not faster, than a conventional loan.
That completely changes the dynamic when making an offer. Another massive barrier the sources point out is the assumption surrounding credit scores.
Yes, the credit score myth.
There is this persistent belief that To qualify for a zero-down, no PMI loan, you must have an absolutely flawless, top-tier credit score.
The structural intent of the VA loan program is to maximize accessibility, not to create exclusionary hurdles.
So they are more lenient.
Consequently, the underwriting standards are remarkably flexible. They are intentionally designed to be far more accommodating of past financial difficulties. They offer shorter mandatory waiting periods after significant events like bankruptcies or foreclosures compared to conventional civilian guidelines.
That's a huge relief for a lot of people.
It really is. They look at the holistic financial picture, recognizing that military life can sometimes create temporary credit turbulence.
But tapping into that flexibility really requires a guide who knows how to present that holistic picture to the underwriter, right?
Absolutely. You need an advocate.
The source material spends significant time highlighting the critical role of a deeply integrated local network. The example used is Sean Carter in the Tampa market. He isn't just acting as some digital document processor. He is bringing an entire ecosystem to the veteran.
Because real estate is ultimately a hyper-local endeavor.
Right.
When an advocate is entrenched in their specific geographic market, they provide access to a curated network of professionals who specialize in military transactions.
So we're talking about inspectors who know exactly what VA appraisers will flag.
Exactly. Contractors who understand the strict VA minimum property requirements, and local financial advisors who actually comprehend military retirement systems.
And it extends beyond the transaction itself into actual community integration. The sources mention connections to local chapters of the Veterans of Foreign Wars, the American Legion, and military-friendly chambers of commerce.
It's the difference between merely finding a piece of property and genuinely establishing roots in a new city.
It transitions the process from a purely financial transaction into a holistic relocation strategy. The advocate facilitates not just the acquisition of the asset, but the integration of the family into a supportive infrastructure.
Which is so crucial for military families.
There is a specific success story in the source material that perfectly encapsulates this dynamic. It details the experience of an Army veteran named Sarah J.
Oh, her story is great.
Her quote is incredibly telling. She states, "The team made the entire process feel effortless. I never thought I could afford a home, but they showed me how to leverage my benefits effectively. I am finally a homeowner."
It's a powerful moment.
What strikes me about that isn't just the successful purchase, it is the massive psychological leap. She went from believing homeownership was mathematically impossible for her to actually holding the keys, simply because she encountered a team that understood how to operate the machinery of her earned benefits.
Sarah's situation highlights the crucial distinction between passive eligibility and active leverage. Her time in service guaranteed her eligibility, sure, but without the strategic knowledge and the specialized network to operationalize that eligibility, she just remained locked out of the market.
The advocate didn't change the loss.
No, they didn't. They simply provided the translation and the execution required to claim what was already hers.
Which brings our deep dive full circle. We started by mapping the critical importance of early preparation. Building that digital folder and securing the certificate of eligibility to harness the government's backing.
Right, getting the billionaire cosigner.
Exactly. And we broke down the immense mathematical advantages of the program. How leveraging the zero-down option and the elimination of PMI doesn't just save a few dollars, but radically alters a family's financial trajectory by preserving liquid capital and driving rapid equity growth.
The dual engine of wealth creation.
And we explored why having a veteran-focused advocate is the linchpin of the entire strategy. It allows buyers to bypass the myths, navigate unpredictable military timelines, and integrate seamlessly into new communities. So, what does this all mean?
It ultimately demonstrates that profound financial advantages exist, but they demand active participation. The mechanics we have detailed today, the flexible underwriting, the waived insurance premiums, the automated processing, these are not just theoretical concepts.
They're real tools.
They are highly practical, proven blueprints for establishing geographic stability and generational wealth. However, those blueprints remain completely inert until the individual takes the initiative to organize their documents, seek out specialized expertise, and actually initiate the process.
It is a radical reframing of how we view these systems. These VA benefits are consistently characterized as hidden wealth-building tools, operating quietly in the background, fully available, yet vastly underutilized by the very people who have already paid the immense price to earn them.
It's time to claim them.
It really is. If a life-altering financial mechanism of this magnitude can be unlocked simply by organizing some digital paperwork, Looking past the civilian market myths and partnering with an advocate who actually speaks the language, it makes you wonder, what other massive earned advantages in our society are hiding in plain sight, just waiting for us to stop being intimidated by the bureaucracy and finally claim them?
That's it for today's Meet Sean. If this helped, follow the show and share this episode with one person who needs it. See you next time.